take a deeper look at what is moving the markets. I want to bring in Keith Fitz-Gerald, principal of the Fitz-Gerald Group. Keith, it's great to see you on Cheddar this morning, and we are talking the final trading day of March, the final trading day of the first quarter. What do investors need to know?
Well, it's very interesting. Everybody is saying that, oh my gosh, the sky's going to fall. They're waiting for the other shoe to drop. But the reality of the situation is that the markets are despite it all rally mode. There's still a lot of money on the sidelines, Kirsten. There's still a lot of opportunity ahead. So the daily squiggles don't concern me. I tell individual investors, take a deep breath, concentrate on the best and ignore the rest.
Okay, good to know. Concentrate on the best, ignore the rest. Would that mean, Keith, that you would be adding to the stock market in this scenario?
Yes, very definitely, because again, the greatest companies are going to be out there with margin protection. They're going to be selling anyway. They've got CEOs who know exactly what they're doing. So for the most part, if you've got a company like, for example, an Apple or a Microsoft or even an NVIDIA, which is pulling back, if you look at the bigger picture, then that's very much an opportunity, not a threat.
How long do you think this rally has in it? Maybe another way to ask that is, at what point are we in this economic cycle? Is this a several-year cycle where you think the stock market can continue to gain?
My belief is yes. I think we're emerging into what Pierre Diamandis refers to as an age of abundance and what I would call the next era of investing. Markets move in long, broad cycles, and we saw that with the introduction of power, the introduction of penicillin, the introduction of various technologies throughout history. This one is sharper and faster because it's tech-based, but there's still, again, plenty of money that wants to go to work. So I think if the Fed stays on the sidelines, obviously there's some big caveats here, Russia and Ukraine doesn't worsen, then in fact we have what we need, the horsepower to move ahead.
Mm-hmm. Anything that you would not be buying in this stock market?
Well, it's funny enough, two of the great big stocks that are longtime favorites, Walgreens and Home Depot right now. Those are the kinds of stocks that I'm going to stay away from because they're really iterations of something we've done in the past. In one case, it's home improvement. In the other case, it's drugs and pharmacies. There are better models out there. There are better mousetraps. So those are the kinds of stocks I'm going to steer clear of. I'm going to favor companies in the defense sector, the tech sector, the healthcare sector, all of which can benefit from technology and I have rented lips this morning, growing global demand. How's that?
We got that loud and clear, Keith. Thank you so much. So we talked a little bit about AI, as you mentioned earlier. Certainly, NVIDIA is the trade there. NVIDIA, we know, has been powering the stock market rally. I think it's fair to say roughly for about the past 18 months or so, certainly since the onset of ChatGPT, that is. What are some other plays in artificial intelligence, or how would you suggest that investors consider getting exposure to AI beyond just NVIDIA?
Well, that's a great question. The thing here to think about is think like the gold rush in 1849. If everybody wants to go prospecting, you sell shovels. So to me, right now, it's the chip makers. It's the AMDs of the world, the NVIDIAs of the world. Even ARM is a proposition here because everybody is going to need those chips. How they get to it, what software they use, which tools they have. It's tempting to go for those small unknown names, but really in this market, it's too early to do that. You want to go with those big names because everybody needs the chips regardless of what platform they're going to be on.
We had seen Apple actually pull back some this year, and I saw some of those tech names underperforming of late, even though we had seen the NASDAQ certainly lead the gains in the stock market last year, and still momentum overall in the NASDAQ, broad tech investments, a broad tech index that we've seen this year. What's your take on Apple?
Oh my goodness, I think, and this is a controversial opinion, but I think the company is far more invested in AI than the public understands. I think the developer conference, there's a very high probability this June's developer conference is going to be an iPhone-like moment. Once the world realizes that, if I'm correct, I think Apple is off to the races. So for me, having this stuff pulled back right now is a great big discount. I'm resisting the temptation to be a Viking at an all-you-can-eat buffet.
We had talked about some of the geopolitical concerns. You had brought them up. The wars that we see still happening, certainly between Russia and Ukraine, and what's continuing in the Middle East as well. What does that mean for the energy market?
Well, I think oil has a very high probability of reaching $100 coming into the elections. You know, there are a lot of bad actors in the world who would like nothing more than to hurt the United States. High oil prices, in fact, could do that. It's going to worsen the impact on the middle class, on the lower class. It's going to divide economics even more decisively than it has so to date. But that doesn't mean from an investing standpoint there's not opportunity. So this is the big oil majors, particularly if you find companies with clean balance sheets who've got global footprints.
Interesting. So NVIDIA, Microsoft certainly has exposure to AI as well with its investment in ChatGPT, the owner of that. Does Microsoft look attractive to you at these levels?
Very much so. You know, I own most of the stocks we're talking about today personally, as well as my family, and our company recommends them because we think these are the players. We're still early game, you know, early days, early innings, whatever you want to call it with AI. It could be the greatest investing theme in human history.
I'm just curious in terms of your outlook for rate cuts, because generally I think that, you know, investors who have watched the stock market for a long time, they associate low rates with higher stocks, potentially vice versa, at least what we saw in 2022. Do you expect 3 rate cuts from the Fed as forecast this year?
Well, I'm chuckling because I think the Fed has been wrong from the very beginning. I think they got transitory wrong. They missed the crisis in formation. The idea that we're suddenly going to bow and kowtow to every word they've got now is ridiculous. So I don't pay the Fed much attention, except to the point where I look at that as a 3 rate cuts, how, when, and why, because I don't see it coming. I've maintained I thought they were going to hike into this first quarter. They haven't gone to the sidelines yet. That concerns me.
Interesting. And inflation does still seem to be sticky, right? I mean, can the Fed effectively get to 2% in the near term?
You know, that's an interesting one as well, because you know what a lot of people don't realize, everybody bathers around about this 2% thing, but people don't realize that that actually is a completely made up number. It just came out of thin air in the late 1980s, and suddenly the world central bankers adopted it. I think 3 to 5% may be the new normal, as much as I hate that expression, but I think the Fed is slow to the table here. They don't understand that that's what's happening, or if they do, they haven't made that public yet.
All right, Keith Fitz-Gerald, principal of the Fitz-Gerald Group. Keith, it's good to see you. Thanks so much for joining.